All right, family. Hope everybody's in great spirit. Me, myself, I'm in great spirit today. Today is my birthday, November 5th. Okay, I just turned 32 years young, and I must say, I'm grateful for my life. You know, I've had a long journey, um, and I'm grateful for where I am today. I'm not to where I want to be. However, I am consciously moving in the right direction, and I'm a lot further from where I came. Right, I remember when I first started trading, when I was 26. I found it, and when I found it, I stumbled upon it. Right, I got in through it through, I guess you could call it network marketing. And when I first found TradingView, which is the charting website, and now you can trade off of TradingView, which is what I do through my broker AMP. I fell in love with it, and I don't think there's probably been, I can probably count on a hand how many days out of the 6 years I haven't looked at my chart. Right. So what I want to break down today is so once again before I get into it, let's be grateful for life. More life, more opportunity. All right, and let's just stay focused, right, on this road towards freedom and abundance. Okay, so if this is your first time, welcome to my page. My name is 500K Trey. Okay, and the company is Black House Management, New Era Advisors. Okay, and what I'm going to be breaking down today is a Confluence Profile 500K model, one of one, and we're going to be talking about a specific play that I caught today on crude oil, and this is going to be a tri-session liquidity collapse hunt. All right, now the tri-session is just like it's based off of the price action that's set up today, but the liquidity collapse hunt is primarily the play, and we title it the tri-session because of how price action played out. Okay, so let's get into it. So this is going to be, I only trade futures, okay, and I only trade commodities. So my leading asset that I trade is going to be gold. And however, I do also trade crude oil as my secondary asset. Okay, so with that being said, let's go ahead and get into the next. Okay, so the market playbook breakdown. Okay, so I like to focus on a small window of opportunity with great context of calculated risk to reward. Okay, so the market playbook breakdown: small window of opportunity, calculated risk to reward, and this is going to be on crude oil, the secondary asset that we trade here at Black House Management. Okay, now the structural setup behind this was it was a defended ice pool of buyers supporting major key level $60 per barrel across 3 sessions. So as you can see here, we have this support and resistance zone, but I like to call it a defended ice pool. Why do I call it an ice pool? Because this is where a ton of buyers are sitting, and they're becoming very aggressive here around the major key level of $60 per barrel. Okay, and they're pushing this market up. So as you can see, on Tuesday we came in very aggressively into the ice pool. Okay, and we were trying to break it consistently here on the 1 hour time frame. We were unsuccessful. We pushed down, unsuccessful. We wicked it. We have an indecision candle. We pushed lower. We were unsuccessful. Okay, sellers are unsuccessful even though they tried multiple times on Tuesday to break this low, this major key level in this ice pool, okay, of buyers. Buyers are doing a great job of defending this. Okay, so we pushed up, we came right back down into it. Look at this bear candle, very strong, aggressive, and we closed at the bottom of the candle. Okay, but look how powerful buyers came back in on the next candle on the 1 hour time frame. We pushed price up back above $60.50 per barrel. Okay, that's a 50 tick move, very, very big move. Okay, so we pushed back down yesterday on Tuesdays. We pushed up for a New York session, then Asia session came. We pushed back down into this ice pool, okay? This demand zone, this ice pool of buyers, and we were unsuccessful. So this is 1 attempt, 2 attempt, 3 attempts, okay? And then we even tried to push down in today's New York session at the beginning of the session, right after we swept London low, okay? So this is what I noticed. Okay, as you can see, this was at 5:56 a.m. this morning. Okay, we had all of these lows that needed to be swept. Okay, so the liquidity map, Tuesday's tri-session lows. All right, so the prior Tuesday, November 4th sessions left stacked liquidity under the big ice pool of buyers defending their lows around major key levels $60 per barrel. Okay, now this setup signaled for potential. This setup signaled potential for a tri-session liquidity collapse hunt. London low, New York low, and Asia low, all held with no sweeps, but multiple failed attempts trying to do so fall support. So what I mean by that is London session, okay? When you see it highlighted in green, this is London session of attempting, all right, sellers attempting to push price lower underneath $60 per barrel, but they're hitting this ice pool of buyers. Buyers got aggressive, bought price right back up. Sellers got aggressive, pushed price right back down with a very strong aggressive bear candle. Buyers became more aggressive, okay, absorbing all of that selling pressure, trying to push price lower, and we bought price right back up, okay, with a very strong and aggressive bull candle. Okay, New York session fell off of a cliff. We pushed price right back down into this ice pool. Okay, what do buyers do? During Asia session. So Asia session comes in. This is the third attempt on a higher time frame, 1 hour time frame. Okay, sellers trying to push price back down, immediately being met with support from buyers around the MKO $60 per barrel, and we push price right back up. Okay, we hit $61 per barrel during last night's London session. London session, sellers came in aggressively, shot the market right back down. And then New York session opened up. We swept London low, and we're coming back down into this ice pool. So this right here is what I noticed this morning at around when I was doing my playbook for the pre-market narrative, creating my playbook. Okay. Now, so my speculative thought, sellers were likely to return and sweep these triple session defensive lows. I recognize the liquidity buildup plus the failed purges, and this created a false sense of long-term support strength. A liquidity trap, big money accumulated, sell stops beneath that triple defense. Okay. Now, when price reached the value area high, buyers became exhausted, with the last buyer buying around $60.80 per barrel with no follow-through, and sellers' distribution began to form quickly. Remember, this is a small window of opportunity, calculated risk to reward. So I noticed that when all of this liquidity was building up, right, sellers trying multiple times, trying to break this level, all right, $60 per barrel, I noticed that, okay, we came back down here. We got shot up again. This is damn near relatively equal lows. Okay, this is a bunch of liquidity that is waiting to be purged. This is what I noticed. Okay, so now it's all about finding that small window of opportunity, okay, and calculating our risk to reward. So once again, here on the 5-minute time frame, you can see yesterday, okay, so today is November 5th, but yesterday's session, London, look, we tried to push it, we were unsuccessful. Buyers bought up, sellers pushed price right back down into this ice pool. Okay, this huge level of support that is being supported, okay, aggressively bought the price right back up. New York session, okay, we brought price down. Asia came out, Asia opened, and we pushed price right back down into this level. Okay, what happens? Buyers become aggressively and immediately shoot the price right back up. You can see here in the CVD. Okay, so yesterday you can see the CVD was bearish because we broke underneath the EQ, which is right here at 0, and then we got aggressive, super aggressive. Okay, and look at this buying pressure. So price moved around 80 ticks. around 80 ticks, creating the value area high. Okay, so that's one failed attempt from sellers, two failed attempt from sellers, three failed attempts from sellers. Okay, but this is a trap. Why did I like to see this as a trap? Because it was providing basically the notion that this is long-term support and we're going to, support this market and push higher. But once you see that we kept getting rejected at $61 per barrel, okay, if I go back, you see, okay, we came up, we pushed down, we came up, we came back down aggressively, we pushed up, okay, right, and we're between $60.50 per barrel and $61 per barrel. Okay, this is like the zone where it's being rejected. This is kind of like the range. Okay, we pushed down, we bought back up into the range, we pushed down, we pushed higher into $61, major key level $61 yesterday during London, and we had a strong rejection. Okay, so when I seen that we had three rejections up here, okay, and the market is overall bearish on the higher time frames, I said, okay, this is going to be a liquidity purge. That was my speculation. All right. Now the execution moment. So the value area high to collapse. Okay. So price aggressively rallied into the value area high around $60.60. Okay, and kept pushing higher around 20 ticks, hitting $60.80. Then were met with a firewall of resistance that cannot be broken. Price immediately started pushing lower towards the major key level, $60.50 per barrel underneath the value area high. Okay, when price hit $60.80, the order flow quickly shifted bearish. Aggressive sellers hitting the ask flipped the delta negative, initiating a sharp collapse hunt. The market was hunting now all liquidity ice pools below, fulfilling the collapse hunt narrative. All right. So what I was doing is when New York opened, okay, New York opened, okay, we swept London low, we pushed back down into the ice pool, and we aggressively bought up. Okay, so we came up into the value area high, all right, around $60.60 per barrel. We came in with a lot of aggression. We pushed up to around to 60.80, and we immediately had a sharp reaction down. And you can see here in the CVD, okay, if you were to use this level as a resistance, I should have drew the line, but I didn't. Okay, price basically swept the high of this volume, and we had a sharp reaction down. Okay, look at this volume right here. The CVD is something that I really like to use in my Confluence profile because it shows me the true intention of the volume behind the move. Okay, and this is very sharp volume shooting down very aggressively. Okay, so as you can see, when we swept New York, okay, sellers, as you can see, we were trading in between this wedge. Okay, we broke out of this wedge. Okay, we came back down to retest it, and then we shot up aggressively. Okay, making buyers think that this market is getting ready to go long, so they were probably loading up around $60.30 per barrel. All right, but what I noticed was all of this liquidity that was sitting below, and that's why I said this is going to be a liquidity collapse hunt. Okay, the market is going to get ready to collapse. Okay, from a higher point, and we're getting ready to hunt all of this liquidity below. We're getting ready to hunt all of this after the market collapse. All right, and that's what I noticed. Okay, I was watching the 15-minute very closely to see if we had true volume from sellers behind the move. All right, right here, the volume, and I'll also show you on the order flow footprint chart. Okay, once we got a confirmed 15-minute candle closure underneath the value area high and major key level $60.50 per barrel in a strong delta flip, I executed short on the very quick retest of $60.50 per barrel, which is a very quick and small window of opportunity. Remember, I'm going to keep saying that. Okay, when we trade, we are looking for those small windows of opportunity. Small window of opportunity. Look at this. Price broke underneath. You see the wick on this 5-minute candle? That was how quick the move was. 5 minute of an opportunity. And it wasn't even, you don't even get this whole candlestick. Okay, it was really a 1-minute opportunity on the 1-minute time frame. Okay, a small window of opportunity is what we are looking to capitalize on. And we have to make sure that it lines up with a calculated risk to reward that is favorable in our favor. favorable in our favor. Okay. Obviously, when buyers broke out, okay, of this descending wedge, we came up, we came back down to retest it, as you can see on this wick. Okay, at 8 a.m. No, I apologize. That was around like 7:30, I believe this was. We had this strong wick down, buyers getting long from the value area low, because you can see right here in the point of the VPOC, the volume point of control, we broke above it. Sellers pushed price back down. Buyers got aggressive, retesting the top side of this descending wedge. Okay, internal range liquidity, and we took up to the upside. All right. Now, this is what I noticed. Okay, so we were riding this ascending internal range liquidity trend line. So we broke above this internal range liquidity trend line, and then we hit $60.80 per barrel. Okay, as you can see, there was a big strong buying trying to take up from $60.80 per barrel, but there was no follow through. Okay, there was no follow through. Okay, and the delta was around 234, and the session delta was very strong, 7,000. But now in the very next candle above the value area high, the delta went negative 248. Okay, and then it went to positive 79, and then it went to -7, -59. But what I want you to look at is the session delta. Okay, the session delta when we broke above the value area high was trading at 6,661. Okay, and then we broke above it, 6,800. And then we hit the high of the day, $60, and just a little bit above 60. Let's just call it 60.80. All right. The session delta was at 7K, and then it dropped down to 6,800. Now, when you see the session delta, and obviously it's dark shade green, when the session delta is at 7,100, okay, and then it drops down to 68, that means buyers lost some strength. Okay, the delta is -248. The min delta, that means how strong the negative selling was in a bar, -275. Okay, and then we continue to get weaker. 79 delta, -7 delta, -59, 69, 69, 68. So now they're just staying stable. And then we go to 6,800. Okay, then a 6,600, then a 6,400. Right? Notice how the number in the session delta is getting weaker. Right? Still very strong, because we had this strong impulsive move up. Right? It went from right here, what is this, 735. This is where price came to retest the bottom side of this wedge right here. Okay, so when price came to test the bottom side of this wedge right here, okay, that was this candle right here. As you can see, all the strong selling pressure, but it was false, and we broke up to the upside, and you can see a huge buyer came back in. All right, hitting the bid, and we aggressively hitting the bid, and they took the market higher. Okay, but when we hit above the value area high, this is where the selling distribution started, because once we hit the value area high, okay, and we hit the high of day, which was $60.80, the delta immediately turned negative. This is what I start to pay attention to, -248, 79. Okay, now this is not a strong delta print, because we were already printing at around 400, 350, 200, 234, and it's only 79. Buyers have their aggression is gone. There's a saying, right? The market goes short when the last buyer has bought. The last buyer bought, because the market immediately broke down. As you can see, there's no more bull candles lifting this market higher. All the buyers are gone. Their move is completed. Okay, now it's time to perform as speculated earlier in the day. Okay, now it's time for us to perform and execute on our tri-session liquidity collapse hunt. All right, so the delta goes from 79 to -7, -55, to a dark shade of -203. This was the 15-minute, when this candle closed right here, This was the 15-minute candle closure below major key level, $60.50 per barrel. Okay, and I executed on this. Now on the 1 minute time frame, we broke underneath this trend line. As you can see, we were riding this internal range liquidity trend line. Okay, we were riding this. We came up to retest it. We got smacked down. We broke above it. Okay, came up, had to retest it. We came up to we broke underneath it, and then we came to retest it underneath the value area high. This could have also been an entry, but this was more riskier. Okay, I wanted to see more confirmation. Now, once we see this red dot, this was a huge seller. When a huge seller entered this market, this is where I entered, because we have more confluence, right? More confluence is now in our favor. So one confluence, okay, we broke underneath this trend line. The second confluence, we were underneath the value area high. Third confluence, we were underneath. We had a 15-minute candle closure underneath major key level. Yeah, so we had multiple confluences as why we entered this this position. So for the confluence profile 500K model 1 of 1, there are multiple reasons as to multiple confluences as to why we're getting ready to enter a position, either long or short. But right here on crude oil for this specific setup, the tri session liquidity collapse hunt, we were targeting short. Okay, now the confluences as to why we entered this trade, as you can see, if you look right here in the order flow, the session delta, when we broke above the value area high, you have a huge buyer coming in right here. Okay, who was aggressively hit the ass, looking to push price higher, but was met with no complementary order flow. The market immediately sold off. Okay, and as you can see right here, the session delta went from 7,100 down to 6,800, and the delta went from positive 234 to negative 248 here in the next candle. Okay, showing that the last buyer has bought. And we all know, right? I'm pretty sure everybody has learned it just like I learned it. When the market will fall off a cliff once the last buyer has bought. Okay, the last buyer has bought, and now the sellers have come into play. All right, so the delta went from negative 248 to 79. 79 is not a strong print. It was already printing at 234. All right, 210, 352, 398. So when we see negative delta at negative 248 above the value area high, okay, and then we only see a 79, all right, cool. That's not enough confluence. That's not enough reason to enter the market yet, because we need more. All right, so then we see negative 7. Okay, then we see negative 55 once we broke underneath the value area high. Then we came back down on the 1 minute time frame. All right, this is the 1 minute retest of this internal range liquidity trend. It's ascending. Okay, so as you can see, this is a trend line that the market was favoring. Okay, so we came up, had a slight reaction, we broke underneath it, then we came to retest it. All right, so the first confluence, we have the session delta in our favor getting weaker. All right, the delta is in our favor getting weaker. All right, now the second confluence, we broke underneath the value area high, and then we had a strong push down, negative 55, negative 203. Okay, and then we have a strong buyer. This is the third confluence. Now this is now on the 15-minute time frame. This was a full 15-minute candle closure underneath the internal range liquidity trend line. Okay, the value area high and major key level was $60.50 per barrel. Okay, 4, we had a strong seller hit the ask, okay, aggressively, looking to push this market lower. All right, look at the min delta. The min delta is basically how strong the sellers were in a bar. Look at earlier in the game, during market open. All right, 615. The min delta was only printing around negative 33, negative 15, 1, negative 96, negative 95. Okay, but now look at where we're looking to get entered. All right, and even show you, look, negative 14, negative 210, negative 275, negative 105, negative 59, negative 60, negative 338, negative 263, negative 249. Buyers are very aggressive right now. All right, look at the bid, 290, 300. All right, fast forward to when we see it. All right, fast forward, 970. 1,100. But look at the buyers. The buyers on the ask was at 1,500 at the high. They dropped. Half of all the buyers that were in the previous candle left. Only printed 722, 1,200, 1,100. Then it dropped. Buyers are getting stronger. 1,100, 1,100, 1,400, 1,100. And this is why I entered this move, because the market is collapsing. All right, the selling distribution has officially started. The market is collapsing. And I was right here, and I'll enter on this small window of an opportunity. Okay, here on the 15-minute time frame, as you can see, we shot up. Okay, we broke underneath the value area high. Okay, and then on the 15, I apologize. Let me go to the 15-minute time frame. Hold on, let me see. Right here on the 15-minute time frame, look, we broke underneath the value area high. Okay, and then we had a strong bear candle close with all of its strength. And on this little wick on the 15-minute time frame is where I entered. Remember, I kept saying this: a small window of opportunity. A small window of opportunity, calculated risk to reward. I gave myself 10 ticks, all right? And I was targeting all of this liquidity against over these last 3 sessions of Tuesdays, November 4th. And look at that, market shot down beautifully. So the trade flow, all right? Price collapsed in our favor as predicted, purging the liquidity from the prior session lows and completing the liquidity collapse hunt. Beautiful. We entered right here at 60.50, 10 ticks. Beautiful entry. Market immediately in our favor from the high. Negative 300, and the delta is just getting stronger negatively. So that means buyers are immediately in our favor. Beautiful. The liquidity collapse hunt sequence. Look at that. Fake out. New York low. I apologize. London low. Market came. New York open. We swept out. We came back into the ice pool of buyers. All right, we were trading in between this little wedge. Okay, retail. We broke out of the wedge. We came back down to retest, textbook, breaking retest, and then we bought up. You could have made money on this move. All right, but it was a trap, enticing all of these buyers to get long from right here when the market shot back down here, sweeping them all out, sweeping out this. Okay, sweeping out their prior low that I already created earlier in the session, sweeping out Asia's low, New York's low, and London's low. Beautiful. Look at the CVD. The CVD is in our favor too. Now, something else that I noticed about the CVD, right? On the CVD, there was overhead resistance around 4K, right? As you can see, when price came up around this level of 4K, shot down. Came back down to EQ, pulled up, shot down. All right, new day, Asia, we pushed up during London, which we hit $61 per barrel, okay, shot down. We pushed back up today during New York around 4K, shot down. Strong, aggressive selling. All right. Naked path line. Look at all this liquidity building. London was building. New York failed to break London. Asia, sellers pushed price down. Sellers tried to purge but failed to break New York and London. We pushed price up. We got rejected at $61 per barrel, major key level. We pushed price back down. All right. New York sweeping out London low. We came back down. We ranged for a good long minute. Buyers and sellers fighting for dominance. All right. Buyers broke up. Fake move, fake out, and came, and we stopped at all of those buyers and swept out all of this liquidity that the market was trying to break yesterday. Purged it. The market collapsed and hunted out all of these liquidity pools. All of these liquidity pools of buying. Stopped. Beautiful. Look at the CVD. Sharp move in volume. That was another added influence to the profile that we can add for this trade. All right. So if this is your first time watching me, welcome. I appreciate you. And here at Black House Management, I aim to leave a legacy behind for obviously our families, our partners, and the legacies that we built here at Black House Management. Now, remember, when it comes to financial risk management here at Black House Management, our profession is managing the downside cost of printing high side returns of money consistently through any market conditions. All right. Now, done correctly, well, an abundance of fruit awaits us. Godspeed. 500K Trey, welcome to the family. If this is your first time watching one of my videos, like and subscribe, and please follow me on Telegram at Blackhouse500K, and also follow me on Twitter, also known as X, at Blackhouse500K. 500K Trey. We out.